Hello, this is Brian Rezny, President of Rezny Wealth Management, bringing you an important update about the economy and the investment markets. Well, the first quarter of 2021 is officially over. Generally speaking, the markets were in a positive mode. Not all sectors of the market, but the sectors that we were in and invested in actually did quite well. We're happy with our overall results for the first quarter. We look for greener pastures as we continue through 2021. But again, that doesn't mean we're not going to get a pullback. Normal pullbacks, normal volatility happen every single year. I like to talk about this on every update video because I don't want clients to get complacent like things go straight up. So we could get a 10% pullback, okay, a 10% drop in the overall market or portfolios before we go up the next 10%. So just kind of remember that. And we may not get a pullback, but I always expect a pullback, and statistically we get at least a 10 to 12% pullback every year in all the investment sectors, whether it's oil, bonds, stocks, what have you. We get usually a dozen to 2 dozen, 3 to 5% pullbacks throughout the year. Again, very normal. So just kind of remember that. We're long-term investors. We realize our clients have goals that are short-term and long-term, so that's always accounted for within the portfolio structure and within our portfolio management. And as always, we will always make adjustments as necessary to the portfolio when we see changing dynamics, not only to the economy, but also other investment opportunities that we want to take part of. It's interesting, I'm getting a lot of questions though from not only clients, but of course my TV and radio show listeners, really about the new administration and all the spending. Let me kind of cover a couple questions that have come up. Number one, is the world going to come to an end? Is the dollar going to be devalued? Should I buy gold now? Our deficit is ballooning. They're spending all this money. Are they going to take my IRA away? That's what I'm hearing. All of these kind of crazy, not maybe questions, but concerns, I would tell you, don't worry about it. The world's not going to come to an end in your lifetime, my lifetime, and probably in the next 2 or 3 or 4 or 500 years. Will things change slowly over time? Are there things on the political landscape that you don't like with the current administration? Sure. Are there things you don't like on the past administration? Sure. But the world's going to keep revolving. It's going to keep moving. Things are going to change slowly. We're not going to become socialist. There's always been changing dynamics. And when you get to a certain critical point, they often swing back the other way. So while I firmly believe taxes will go up, the vast majority of investors, your taxes are not going to go up because of your income overall limitations or income currently. Your IRAs are not going to be taken away from the government. They're not going to tax your IRAs. That's not going to happen in your lifetime. So again, the overall fear factor on the internet and all these crazy emails about buy gold, your portfolio's going to zero. These are all sell tactics with different marketing firms in order to sell you something. Fear sells really well. I've been managing money over 30 years. I will tell you that I've seen more newsletters, more internet, more email, gimmicks, and things that are totally false. They come across my email on a daily basis. Our clients are probably getting the exact same things. You may have friends that are talking about, oh, the world's coming to an end. You know what? There's called the herd mentality. Often investors want people to think like them so they can justify the mistakes they're making. Don't make those mistakes. As I've often tried to teach my clients, learn from others' mistakes. It's less costly. While nobody may like the increasing deficit, while you may not like that your taxes may go up slightly, it's not ultimately going to change your life. Maybe you don't like what's going on the border, or maybe you don't like to talk about socialism. We're not going to become a socialist country, at least in your lifetime, my lifetime, and probably your grandkids' lifetime. But could that happen one day? There's a possibility. So as I've always said, enjoy your life. Don't worry about the small stuff. Let us do that when we're looking at the overall portfolio. And if we do need to make an adjustment to our portfolio or portfolios, we're certainly going to do so. Again, we're looking for a growing economy in the U.S. this year and next year substantially. Probably GDP, as I've talked before, between 5 and 6%. I think it's going to be between 5 and 8% the next 2 years, and realistically could be in the 3 to 4% over the couple years after that, because of all the pent-up demand from last year, the stimulus from last year, the stimulus this year, the infrastructure that probably will get passed in some form or fashion. So the economy the next 5, 6, 7 years, potentially decade, could be pretty good on average, between 3 and 4% on average over the next decade, which would be pretty good. Inflation may be a little bit hotter in the next couple quarters, but it's not going to be Jimmy Carter inflation. We do not own gold. We're not going to buy gold anytime soon. Again, a fear factor, scare tactic from a lot of these email newsletters. If there's a time we feel we should buy gold, we will certainly do so, but now is not the time. Overall equity valuations are fairly priced, but earnings will probably come in better over the next couple years. So again, I look for opportunity in the equity markets. The bond market, in my opinion, and probably the opinion of most smart money managers, is grossly overvalued. Now, I will tell you, the bond positions or income positions we own in our client portfolios are on the low duration side, so they're not overinflated. They're where you want to be. But I will say this, the investors that are hiring our firm, new clients, are coming from the big brokerage houses and banks, and they're oversaturated with exactly the wrong kind of bond investments. Or we're getting people that are calling for my TV radio show that are 50, 60% in bonds that are basically not going to make any money the next probably decade and have a lot more risk, in our opinion, than the equity market. So again, we're properly positioned, in our opinion, on the bond side. The equity side will make adjustments as necessary. But remember, there's all kinds of marketing gimmicks out there on the internet, emails into your inbox. Most of this stuff is complete garbage and hype in order to have investors do things they probably should not be doing with their money. We stay away from that. Speculation is never good. We don't speculate. We invest in areas that truly have growth potential in dividend, earnings, and capital appreciation. Again, if you're a client of the firm and you have any questions about your portfolio, you want to do a phone review, an office review, or you just have a general question, call the office. We love talking to our clients on a regular basis. We are here to properly manage your money, keep you well communicated to, and make sure you're happy and you have a quality in portfolio and a very quality retirement. Have a safe and profitable day.